Talking about Mr. Pramod Karnad, he is having 40 years banking experience in executive capacity. He is ex-managing directly administrator with DCC Bank, Bid. He is working as chairman, board of management, Sharad Sahakari Bank, Pune, and he is consultant to many cooperative banks. To have such a versatile person with us today, I request Mr. Pramod Karnad to address the audience on paradigm shift in the banking industry.
Good morning, everybody. No force. Once again, good morning, everybody. Yes, that's fine. I am happy that I have been invited here to address you. Thank you, Sterling Institute of Management. Thank you, Principal and the Director. Thank you, Ashokji. And thank you, fellow eminent speakers here. And my dear young friends. The conference is on the topic of transformation in business and social practices, creating a sustainable future. This is very, very important theme. I am in the banking industry, and this business transformation is applicable to all industries, irrespective whether it is a bank or an insurance company or an IT company. It is applicable to all corporates, all companies, as long as they are in the market, they are in the business. Because time is always changing. You all will appreciate that time is always changing. Customer preferences are always changing. Time is changing because there are changes in the socio-economic political environment, right? There is change in the political environment. Right now we see many changes in the political environment. Yesterday something happened, today something happened, it's happening. Yesterday you came across with the news that the member of parliament is disqualified. So today agitations. So every day we come across with a political news. The government is toppled, the environment is changed. This is a political game. Then there are social also environment changes, economic environment changes. Due to Russian and Ukraine war, there is heavy rise in the interest rates, inflation. Even the Reserve Bank of America, which is called Fed Reserve, Federal Bank of Philadelphia, Fed Bank, it is popularly known. They are also raising the rate. And because of that, possibly you might have last week or a fortnight back, you might have heard that 2-3 banks, they were liquidated or merged, American banks I am talking about. So, and many American banks are in trouble because of the inflation over there, because of the interest rates. They are abusing the Fed bank only. So what I mean to say, the economic or social or political changes are there. And in those crises, you have to sustain, the corporate has to sustain. We can see that recent fallout of few American banks, they couldn't sustain. There was a run on their bank to withdraw their funds. The bonds which were invested by the American citizens, they started withdrawing. So you have to have such type of corporate governance, or the organization should have such type of business processes and your other things, so that you can sustain, you can survive in future also, irrespective of any challenges being faced by the social, economic, or political challenges or environment. Pani milel, pani. And therefore, sorry for interruption. And therefore, friends, a corporate which can sustain and keep itself ahead of time will survive. The best example is Apple. You know the IT company Apple. You must be using various gadgets of Apple. My young dear friends, possibly you might be having mobile also. So Apple was just a hardware company. It was just a hardware company. And it was so ahead of time, it changed its policies and its fundamental things, and it became the biggest consumer solutions company. It was successful on the US bourses, that is on the stock exchange. Whereas the companies which are not changing itself will not flourish, will go down, will be thrown out of the market. And always in the management theory, the example is given of Kodak company. Once upon a time, Kodak was the best filmmaker. Best. Kodak was the world number one company. But it was not going ahead of time. Even in the digital era, it faced lot many things. Despite that, in fact, Kodak produced first a digital camera, but thereafter they couldn't sustain. And today we don't find Kodak at all. So always these two examples have been quoted in the management theories, that the business transformation and sustainability in future. So business transformation is nothing but to accepting a change, making changes, process changes, fundamental changes. So when you are changing yourself in the appearance, in the processes, then you sustain yourself in the market. So that's how the corporates survive, or they keep up their rank up. Otherwise it is going down and down. So now I will come to my topic. This was just an introductory thing. When we have a business transformation, there are lot many advantages. You can raise your profits, you can raise your net worth, you can cut the costs. So many ancillary benefits are there. Revenues are up. Cost cutting is very much there when you are transforming. And when you transform, what you relabel yourself. You have a new outfit. You have a facelift also. There are mergers and acquisitions. Lot many things which take place in business transformation. Downsizing and outsourcing is not a business transformation, my dear friends. So the business or transformation is must, as I told you, it is all necessary for the banks as well, in which I hail from. She introduced that I am having a 40 years banking experience. So banking necessarily is a service industry. And service sector contributes almost 56% of GDP. So this is one of the best contributors to the GDP, this sector. And banking, finance, insurance, finance sector we can say. So all this is a service sector. And to sustain in the competitive world, you must have seen lot many banks also getting liquidated. Many cooperative banks, many private sector banks. And so to say, even few nationalized banks were also in trouble. I'm going to tell in another 5-10 minutes, those which have been given to me. Thank you, doctor, for preponing my session, because I have to attend I have to address one meeting down at first floor at 11:30. So I requested. Thanks. So even a nationalized bank, I can quote Dena Bank. Dena Bank was a nationalized bank, but still it was not in a profit. It had high amount of NPAs. It was loss-making bank. So finally it got merged with another bank in nationalized banks. So not necessarily that the only cooperative banks or a private sector bank, they are falling out. Even the nationalized banks as well, they are also having problems. So how to survive? Sustainability I am talking about now. And if we come to my topic, that paradigm shift in banking sector. So then I can segregate the duration in 2-3 phases prior to the independence. Do you know when Reserve Bank, the central bank, our central bank, when it got established, when it was founded? Anybody? In year, do you know? Do you know what is Reserve Bank? Huh? जोर से बोलो. What is its prime objective? Can anybody tell? Okay, I will not go into the details. You know it's a central bank, bankers bank. The central bank, that is our Reserve Bank, got established in 1934. But prior to that also banks were there. Few banks got registered prior to RBI came into the existence. Then RBI was initially, this is the paradigm shift in banking sector. RBI was also nationalized. In the beginning, it was of shareholders, so privately owned. And it was a British ruling time there. We were not independent. We were under the regime of British. So in 1949, at 1948, there was a Reserve Bank Transfer of Ownership Act was passed, 48. And then 49, the government share capital came into, and the major portion went to Government of India. And that's how it got nationalized in 1948. The Imperial Bank of India was there, which we know as a State Bank of India today. So these are the evolutions. Imperial Bank of India, which came from the, actually there was a Bank of Calcutta. The Bank of Calcutta was later on known as Bank of Bengal, and then there was Bank of Mumbai, and Bank of Bombay, and Bank of Madras. Those three banks got merged to come into the existence of Imperial Bank of India, which subsequently was converted as State Bank of India. Today's biggest bank in India, the biggest giant, we call Big Daddy. So these banks, Reserve Bank is our central bank, State Bank of India is our biggest bank. It had associates also. There were, you might have, few years back, you might have heard State Bank of Travancore, State Bank of Mysore, State Bank of Jaipur and Bikaner, State Bank of Hyderabad. These all were 6 associate banks of State Bank of India. Today they are not existing. This is a paradigm shift. Today all those State Bank associates got merged with the parent bank, that is State Bank of India. So no longer those State Bank of Mysore, State Bank of Patiala, they are existing. They all got merged because of the policies, because of the requirement. And they got merged with the parent bank, State Bank of India. And it has become a very, very, very strong bank now, one of the best banks. It is among the top 50 World Bank. It has ranked in top 50 World Bank, SBI, our bank. So this is the change, this is the paradigm shift in the banking industry. But as I was referring to few durations prior to independence, that's why I referred Imperial Bank, which subsequently became State Bank of India. Now there was a Banking Regulation Act in 1949, which gave powers to Reserve Bank of India. As a central bank, Reserve Bank got enormous powers as a regulator, as a currency printer, as inspection taking, or taking monetary tools like declaring CRR, SLR and everything. So all those things, open market operations. So that power RBI derived from the Banking Regulation Act 1949. So this was very important phase, once the BR Act was formed and RBI got licensing, delicensing, supersession of board, appointment of chairman on the public sector banks, etc. So many powers, RBI, even supersession of the chairman of the board of public sector banks, or as a regulator, whatever the powers are available, that is under Banking Regulation Act 1949. Subsequently, in 1966, the power RBI got to regulate the cooperative banks as well. So before 1949, pre-Independence Day period, under the British regime, this was the banking scenario. Then the major after independence. After independence, there was Reserve Bank, yes, but the interest rates were regulated. Today, you might have been seeing that some Kotak Bank is declaring 9% of deposit rate, some small finance bank is saying 8.75%, some bank is declaring 8%, and State Bank is declaring their deposit as high as only 6.5%. So there is variations in the deposit rates. So this is a liberation era. Banks have been given power as per their balance sheet, as per their net interest margins, they can declare, as per their base rates, they can declare the deposit rates and advances rate. But that was not the scenario prior to 1991. Till 1990, their time, RBI was monitoring. The interest rates were regulated. You will be surprised to note that banks had no liberty to decide their own deposit rate. They had no liberty to decide their own lending rates as well. So everything was regulated. Then the main paradigm shift in the banking sector was 1990, when the economy was opened up after the liberalization. We give full marks to then Prime Minister P. Narasimha Rao. He was the instrumental person to change the economy of India. He opened up the economy to the world in the economy, and so he formulated a new economic policy. And who was the finance minister? Can you tell me in 1991 who was the finance minister of India? Yes, Dr. Manmohan Singh. We know Prime Minister Narasimha Rao was instrumental. Similarly, Dr. Manmohan Singh, who was the governor of RBI, became the finance minister in the cabinet of Narasimha Rao, and he was instrumental to take out this new economic policy in 1991. He was the finance minister. And then economy was opened up, the liberalization took place and the foreign investments were allowed inside. Interests were deregulated. As I was talking about, the RBI no longer started regulating, and the interest rates were decided by the banks themselves as per their requirements, as per their balance sheet, as per their fund position, as per their surpluses, as per their net interest margins. They decided that how much we should have a base rate, how much margin we should take up, and how much we should have our lending rate. And cost of fund. They used to calculate their cost of fund, their borrowings, their average deposit rate, and then they used to calculate. So this on the basis of averaging on the quarterly basis, or even on the 6 monthly basis, or on the yearly basis, they started declaring their own rates. Till that time, savings rate was regulated. But because of 1991, there was one committee, that is a main committee. 1991, there was a Narasimha committee. So this Narasimha committee, and the chairman of the committee was Narasimha, so it was called Narasimha committee. The chairman of the committee was also a governor of Reserve Bank of India. See, Manmohan Singh was governor, he was the finance minister. Narasimha was the governor of RBI, he became the committee chairman. And the committee, Narasimha committee in 1991, recommended so many things. That time the SLR, do you know, what is banking? Banking is, in a simple term, accepting of money, that is deposits, for the purpose of lending or investment. This is very, very simple definition. We banker, what we do? We take money from depositors, that is depositors' money. We take, suppose 100 rupees we take, and then we lend it to the borrower, to the needy person. Now, if I take 100 rupees from the depositor and lend 100 rupees, then in that case, there won't be any liquidity with the bank, and therefore SLR and CRR ratios are there. So 30% was the ratio, and long back it was 38% SLR. That was brought down to 18%, and 15% CRR was brought down to 4%. So Narsimham committee did good job. 1991, again 1998, the second Narsimham committee, which was called Banking Sector Committee, that also recommended so many things, and therefore new private sector banks came. You can see after 2000, till that time private sector banks was not there. In 1969, banks were nationalized by Indira Gandhi government. That time there was a monopoly of private sector banks. See how the scenario is changing. The government felt that the private sector banks are not going to the farm sector, not going to the rural places, and therefore she nationalized 14 banks for the purpose of that those banks will cater to the needs of rural people and the rural sector. Whereas today, the Modi government is feeling that the private sector, public sector banks should be privatized. The other scenario, because now the nationalized banks are having monopoly. So how the paradigm shift is there? Then there was so much of opposition for privatization. Then he started merging. So you can see the syndicate bank getting merged with Canara Bank or many other banks. 14 banks, now only there are 14 banks. 7 banks are independent banks, 7 got merged. So many banks, United Bank of India, etc., Dena Bank also got merged with the Bank of Baroda, etc. So this is again a paradigm shift that nationalized banks were merged. Why it was merged? To become a strong bank, to become a cost efficient, to have a better operations. So these are the paradigm shifts, And now, as regard last point, I can give a speech for another 1 hour, but constraint of time. So last point I will just narrate, and that is it is a technology driven point. So now the banks, which bank has also to do its business for a longer run and sustain it has to have its sustainability, and therefore the digitalization has to be accepted by the banks. Now you can see today, you can see the mobile banking, internet banking. All young boys, you don't go to the branches of the bank. Even for the account opening, the bank is coming to your doorsteps, but not at one point of time. That time when the bricks and mortar type of concept was there, and when manually everything was operated, the customers used to go to the bank, open their account, and that time the KYC concept was also not there. There was one person used to introduce the account and all that. On the introduction of somebody's bank, used to open the account, that somebody is having account, old customer, he is introducing, and then that was the KYC, that's all. So today how it has changed? Because of the money laundering and so many other things. Anti-terrorist activities, laws were enforced, and the KYC, that is know your customer, that has become a prime word in the banking while opening of a bank account. And now you can open up an account online also. You have to just send the documents, scan the document, your Aadhaar card, your PAN card, etc., your driving license, or if you have a passport, just scan it and send it. And you don't need any introducer. And it is self-explanatory, and the bank will open your account. So these are the changes. And you open your account, you operate from the house, you operate from the school or from the college. Here, you can transfer from here only by mobile operations. So internet, mobile, then even artificial intelligence, robotics is there in the banking now. So banking is changing and changing, and those who do not match up with the changing times, these banks also will not survive. That's my conclusion. So any organization, irrespective of the bank, insurance company, IT company, or any other organization, irrespective of either its business transformation is must. You have to have acceptability and changing in the processes and your policies, and so that you can sustain in the long run of life, and you can compete with each other and sustain your existence. Thank you so much.
Thank you so much, Mr. Pramod Karnad. You have thrown light upon many things, sir, many aspects of the banking industry, like increasing competition, a cultural shift, regulatory compliances, changing business models, security breaches, and likewise. Okay. So this was a very informative session, sir, for all the students, for all the participants over here. If there are any questions for Mr. Pramod Karnad from the audience, you may. Yes. Mike, please.
Myself, Mehnaz Mujawar from FIMMS. My question is financial inabilities and facts on SVB leads to great financial crisis. So it will impact Indian banking system?
See, our Reserve Bank is strong enough. It has prudent banking. It has proved in the past also. And today also it has proved. Even if there is a crisis in US, our banking industry has not been affected. That's because of the policies of, we may call some orthodox policies, but still we have not been affected.
Thank you, sir.
Sir, I would like to add something on the question which is asked by Mehnaz. Okay, sir, there are many crises which are going globally. There is a fall of Silicon Valley Bank, the fall of Credit Suisse, which was too big to fail. But still those organizations failed. Okay, so what kind of, and it is being said that the 2008 crisis are going to happen again. So I would like to know your opinion on the same.
You see, that's what I was saying. You know, the RBI is using tools for controlling the inflation. It has got tool of controlling the rates. It is controlling through the repo rate. You know, once the repo rate is up, they can control the inflation. If the repo rate is down, then the money is cheap and the people can buy more. If you higher the repo rate, then the interest rates are again high. Today we can see that the interest rates are going up. This is the global effect, and RBI is doing that. RBI is exercising through its monetary tool. Every monetary policy, you can see some 25 basis points, they're raising the repo rate. And because of repo rate, then the money supply is they are tightening. And that's how they are maintaining the pressure of inflation low. Ukraine and Russia war, it has really affected, because the balance of payment which is affected. Exports are less and imports are more, than the trade deficit is there. So in the balance of payment, the RBI maintaining that balance of payment, and when there is a high trade deficit, such type of that has been affected on the Indian economy. And therefore these monetary tools are given. That's the thing.
And sir, any precautions
And
for
we have very good foreign exchange reserves. That's another thing. RBI is maintaining excellent forex reserves. And forex reserves are in the form of deposits with the bonds and deposits with the foreign central banks, in the form of bullion and the SDR rights.
So one more thing, is there any precautions that needs to be taken by the Indian startups?
Yes, risk is always there, you know. For the Indian startups, risk is always there. You have to have your own due diligence while choosing your bank. You must have your own due diligence, because today there are many small finance banks and they are doing good business. But you have to have a due diligence. Now there is a insurance for 5 lakhs deposit. Suppose a depositor deposits 10 lakhs with any SFB, and that SFB goes down or liquidated, he will lose 5 lakhs and will get only 5 lakhs. So like that, the startup also, when you are borrowing money, you need funds. But a bank which is having liquidity crunch will not fund you beyond their this thing and as per your expectation. So therefore, there is a risk, and banking is again a risky business. So it can happen to any bank. Why only Signature Bank and SVB?
So one small question from me before we end.
Sure, sir.
I consider Pramod Karnad as Pitama Bhishma in the banking industry. 40 years of experience in the banking industry, students. This particular model limits us in time, but one very different question. We have been very worried about terror financing, and I'm sure this government has taken many steps in cutting down the financing. So how this has brought down the enemy country and the instances of terror. So some financing aspects of that, sir.
See, demonetization was one of the objectives for this, to prevent the terrorist activities, because it was apprehended that there is great amount of fake money, fake 500 and 1000 rupees. So that was one of the objectives, and hoarding of black money and all that. So way back in I think 2016, November 16, Modi declared the demonetization. So this is one thing. Demonetization was there in the past. There is a great amount of dispute whether every objective was whether it was achieved or not. But demonetization was one of the solutions for that. And now the act is very this thing, that is Anti-Terrorist Act and Money Laundering Act, PMLA. So RBI is very, very keen on that. So RBI is very vigilant, and all banks have to every month they have to give information that whether there is a suspicious transaction in any of the account. If any account or money or money laundering can visible, from one account to another account to another account to another account, and one bank to another account, and then getting withdrawn. So that if you notice any suspicious account or there are returns, monthly returns, and that directly goes to FIU, so finance department every month, and you have to declare all those accounts, suspicious account, to RBI and to the finance ministry, and RBI is monitoring over there. Great vigilance is there. They will perhaps have a monetary penalty also if you hide the information and if you do not give any information. So that's how the monitoring, RBI is monitoring, FIU is monitoring, and that's how we are trying to control the terrorist activities and funding of terrorist activities.
Got it, sir. Thank you.
Yes, sir.
Thank you.
Thank you so much, Mr. Pramod Karnad, for addressing all our queries.
Thank you so much. Had a good time.
On
Kindly-
behalf of NCRD Sterling Institute of Management Studies, I thank you once again, sir. And I welcome Mr. Amarjit Karade, CAO NCRD, and all the dignitaries who arrived later to the conference day 2. Thank you so much.
Thank you. Kindly permit me to leave the house, though I would have loved to be here.